Wonderful news. There's a brand new program out there available for first-time home buyers and repeat home buyers that's sure to going to be a great success story for all of you that are looking for your first home. Hey, it's Anthony Fletcher. Thanks for coming to my channel, A Lender's Point of View. Today we're going to be talking about a brand new 1% down program that's going to be great for you first-time home buyers getting into a house. Okay, let's just jump right into it. As far as the program is concerned, it's like I said, it's a 1% program. It is being offered by several different lenders out there. So you do need to talk to your loan officer or find a loan officer that can actually handle these type of programs. So let's go over the specifics. So what it is a conventional loan, and it is a 1% down program, and it has a 2% lender grant. So it's 1% down and 2% grant money given by the lender. So that will be a full down payment of 3% when you put all that together. It is a 97% loan to value loan, and it can be done through Fannie Mae or Freddie Mac. Now the program itself has some very specific things that you do need to know about it. So let's go into those here. First of all, from what I've talked to several different lenders out there, that they can actually choose what the grant amount money is going to be, and it's going to be 2%. So some loan companies are only going to go up to maybe $200,000. I talked to one company, they'll do loan up to $200,000 as far as the grant money being the 2%, so that would equal $4,000. Another company will do loans up to $250,000. So that would be $5,000 of grant money. I talked to one company that could do up to $350,000, so that would be $7,000 down payment they could do it. So let's kind of look at the situation. So what we know is that it's going to be up to $350,000. Not all lenders will participate. Out of the 5 that I did talk to, 3 did it and 2 are not doing that particular program. So you do need to talk to your loan officer, talk to your realtor. Maybe they can find a mortgage broker that might be able to have access to that program. Lower rates. They are using the Home Possible and the Home Ready programs that are available through conventional financing, which will really help to give you a lower rate, especially for your first-time home buyers. Now, one thing that you do have to do, though, for this program, it is available for all of those that meet the 80% less or equal to 80% of the area median income. Now, those particular income numbers are published once a year, and they're actually in the process of renewing those for this year. So be sure to look at that. You can certainly just go on to look at specifically for the county that you're buying the house in, and it's usually broken down by the number of people that are in the household. Okay, first-time home buyers or repeat buyers. So even if you are a repeat home buyer, you could use this particular program. A huge benefit is no mortgage insurance on this program. So that's a huge win. When I did talk to some of the lenders out there, what I did find out is that they are giving them the exact same rates to those people that are using this program as those rates that if you were putting the 3% down yourself. Another thing that you can do is that you could put extra money down on this program. So you, the buyer, can put 2.99% and then get the 2% match. So 4.99% down payment. That's the maximum. And then buy downs are allowed. That means that if the seller is willing to contribute to help, or if you want to actually pay for lower mortgage rates, that you can actually pay that money, what they call it buy down, an upfront dollar amount that you want to pay to get a short or long-term lower rate. Now finally, credit scores does need to be at 620. So once again, being on a conventional loan, it is credit score driven. So those people that have higher credit scores are generally going to get better rates that have lower credit scores. So let's talk about putting this all in one quick breakdown of what it would look like. So here we have a purchase price of $350,000. Your 1% down would be $3,500. The lender would give the 2% grant of $7,000. And then with this, the seller is also able to pay for closing costs. So in this model, we're looking at closing costs roughly at $6,000. The seller is giving you $6,000. So your total investment in this is going to be $3,500, and the total loan amount is $339,500. So there you go. This program does come by a bunch of different names out there. So look for the 1% down program plus a lender grant. Ask for that type of program, and then your lender should be able to identify and run with that to get you that type of program and see if you'll qualify. Thanks for showing up my channel. If you would, please hit that subscription and the like button. It does great wonders for the channel, and I sure appreciate it. And let me know your comments, and we'll see you again on the next video. Bye for now.